Hi there, I'm Mike Larson, Editor-in-Chief with The Money Show, and I'm here at the Orlando Money Show with Stephanie Pomboy. Stephanie is founder and president of MacroMavens, a boutique research firm that provides macro research and commentary to an exclusive swath of the institutional investment community. Stephanie had an interesting topic when I saw it on the agenda here, and I think you're going to really get a kick out of it. It's called When Stupidity Succeeds. Stephanie, how are you?
I'm good, thank you. I may have to trademark that because
I feel like it needs to be there.
Catch on.
It did. So let me just start broadly speaking and ask you, what is the gist of your presentation, and where is the stupidity that you're seeing out there?
Well, people probably won't be shocked to know that the stupidity that I'm referencing is on the behalf of the Federal Reserve, who have a very long and lugubrious history of making stupid maneuvers. So the latest being possibly their greatest blunder ever. So my presentation really kind of, as I said at the top of my speech, was an attempt to take us from whatever you think the current environment is to the potential that this policy misstep might actually bring about the end of the dollar reserve standard, or even the fiat money standard in general. So it was a wild ride.
Got it. Okay. So monetary, the responsibility being in sort of the Fed's lap. Or what is it that the Fed's doing that you think is misguided, wrong, however you want to label it? And how do you think things are going to unfold over the course of the next 6 to 12 months?
Well, I think, first off, the reason why I view this as such a policy blunder is that they've applied their cheap credit crack, for lack of a better expression, so frequently and so aggressively from crisis to crisis that we've now built up an enormous amount of leverage, and that means our threshold of interest rate paying has therefore gotten lower and lower and lower with every time they add more credit. We have less ability to withstand any increase in interest rates, and yet somehow oblivious to this, they're raising interest rates at the fastest pace in history. I mean, Volcker didn't even raise rates as aggressively as the Fed has. And so I'm just surprised that I'm the only one, or among very few voices, who think that this is going to end in disaster, because that's how it's ended every time they've done this in the past.
You know, it's funny because you hear a lot of commentary on Wall Street and elsewhere. Oh, it's a few hundred basis points. Rates historically are still low. When I got my first mortgage in the 80s, I paid, fill in the blank, 15, 16%, what have you. Why do you think that sort of approach or thinking is wrongheaded?
Yeah, it's interesting because still low is definitely in the eye of the beholder. And we learned that the hard way with the subprime mortgage crisis. I mean, obviously things got ridiculous there where they were extending loans to people who didn't even have to prove they had income. But what we found was that a whole bunch of people who took out adjustable rate mortgages could only afford that rate. And one reset and they were out of business, basically. And I think the problem today isn't on the housing side. We've already had that experience and people have been chastened enough that they didn't repeat it. But the corporate sector is the one that was the real credit taker and the real abuser of the Fed's cheap credit over the last few years, levered up their balance sheets enormously, and rather than borrowing as long as they possibly could, they have an enormous amount of debt that they actually have to roll just in the next few years. So these higher rates are going to really impact them.
Sure. So I mean, if you sort of throw that all in a pot right here, and you look at what's going to how things are going to unfold over the next year, is the corporate credit situation going to be the real trigger of this recession? Do you think we're already in recession, or what do you think is going to be happening as we roll into 2023?
I think we're in a recession, and I think the corporate credit bust that I foresee coming will just be a compounding, aggravating factor. But I do think the economy is already in recession. And the Fed probably has over-tightened already. It's just that the long and variable lags of monetary policy are still moving through the pipeline. And the damage is, being silently inflicted behind the scenes. I mean, Lord knows we've seen tremendous pain already in the housing sector, which is the most interest-sensitive area. So I do think the corporate credit bust will be just an aggravating factor. It's almost reminiscent of a way of the whole housing bubble bust, in that first you had the housing bubble deflate, and then you didn't deal with the knock-on consequences to the financial sector till 2 years later. So that can happen this time, where we have this economic downturn, and the impact on the corporate credit, on the corporate balance
Yep.
sheets, comes with a lag.
Okay. Now, before I get to probably the most important thing, which is sort of what investors should do to protect themselves or profit, I just have to ask, why do you think this happens? Why did we have the Fed, stumble into a housing crisis and now stumble into a corporate credit crisis? I mean, I read their financial stability reports, and it just seems all be downplaying and poo-pooing this idea that this is going to be a real problem. So, what do you think is going on? What's the issue?
I mean, I puzzle over it because, again, I look at all the charts and I look at the data, and as I outlined in my speech, the Federal Reserve has 23,000 people working there, 400 PhD economists, and they can't figure this stuff out. I mean, the data's out there. Even I have been able to see what's going
Sure.
on. So why they keep getting into these situations is puzzling, and there are only a couple of possible explanations. And one, I think, is that they have such hubris that they imagine they'll be able to navigate us around whatever rocky shoal it happens to be, because they're just that smart. The other possible explanation is that they do see all the things I see, but to say that and verbalize it would scare the bejesus out of everyone and create exactly the downturn that they're trying to prevent.
Yeah.
So they're just telling everyone, oh, everything's fine, it's going to be no problem.
Sure. Hey, pride goeth before a credit crisis. Should that be an expression? I don't know.
It could be now.
All right. So let's say that the things sort of play out the way you see it happening, with the recession risk, with the corporate credit unwind, whatever we want to call it. What does an investor do, right? I mean, we've had 2022 has been a rough year for almost every asset class already. Looking forward, what does an investor do? I mean, either protect or profit.
Yeah. Well, I think the number one goal here should be capital preservation. And obviously, that's already been made extremely difficult by virtue of the rampant inflation that we have. So you're just losing money every day, even though you're doing nothing. And I do happen to think that we're actually less than halfway through the deflation of the stock market bubble, and we still haven't even begun to see this corporate credit bust that I'm talking about. So I am really just keeping my powder dry. I'm on the sidelines. I don't want to have any exposure to risk. And I would just like to see this whole thing cleansed and then take advantage of the opportunity on the other side, which should be phenomenal. If we finally get to wring the excesses out for once, we'd have the investment opportunity of our lifetimes.
Yeah.
But so I'm in cash, I own gold, and I have some long Treasuries because I think we're headed to the recession, and that'll, I think we've seen the peak, or we're pretty close to it in terms of Treasury yields. I think private borrowing costs, mortgages, corporates, et cetera, will continue to move higher.
Yeah.
But I think the Treasury curve is probably an opportunity.
Okay. And I think, it's a great point, great thing to end on there. I mean, ultimately, your view is optimistic, right? I mean, ultimately, if we can go out there, acquire cheap assets, pay reasonable prices for whatever, stocks, real estate, and so on, I mean, that's ultimately what every investor wants, right?
If we can just get these stupid PhD economists out of the way and stop making dumb policy decisions, we'd actually be able to have free markets, and that's what this should be all about.
Great. Well, Stephanie, thank you so much for your time. I appreciate it. And thank you all for watching here from the Orlando Money Show. Take care.